Hello and welcome to another video from Accounting How. In this video we're going to look at how to prepare an expense account that includes accruals and prepayments. If you haven't already done so, please take a moment to subscribe to the channel and like and share the videos, and you can also follow us on Twitter at Accounting How. Here is the question for this video. As always, you might decide to pause the video now and have a go at the question yourself if it's a topic you're familiar with, or stay with me and we'll work through the question together. On the 1st of August 2021, Louisa had prepaid her vehicle tax by £120. During the year ended 31st of July 2022, Louisa paid £1,646 for motor repairs. At the end of her financial year, she still owed a local garage £231 for a new windscreen. And we're being asked to prepare the motor expenses account for the year ended 31st of July 2022 and show clearly the transfer to the income statement. You'll notice on the slide I've also put some key theory. We can have expenses that are prepaid and expenses that are accrued, also just referred to as prepayments and accruals. Prepayment is an asset and an accrual is a liability. You can see I've drawn out my T account for motor expenses, and so I'm ready to begin the question. The first thing I'm going to do, you can see my thought process coming up, is ask myself what was going on, what was the situation at the start of Louisa's financial year. And if I look at the dates in the question, we're being asked to prepare the motor expenses account for the year ended 31st of July 2022. So if her financial year ends then, it means her financial year must have started on the 1st of August 2021. So I'm looking for anything that was going on the 1st of August 2021, and I can see the first sentence. It tells me on that date Louisa had prepaid her vehicle tax by £120. As we've said, a prepayment is an asset. Effectively, you can think of it that she's ahead of herself, she's paid something before she needed to. So in her eyes, it's kind of a good thing. She's prepaid the bill, if you like, before it was actually due. She's ahead of the game. So assets, as we know, are brought down on the debit, applying basic principles such as the dead click rule. And so the first thing I'm going to enter into her account is August the 1st, the balance brought down £120. Going back to my thought process, the second question I'm going to ask myself is what happened during her financial year. And if I refer back to the question, I can see during the year ended 31st July 2022, Louisa paid £1,646 for motor repairs. Well, this is an expense. It's an expense account. I need to increase the amount that she has spent. I'm increasing the expense. So again, applying a rule such as the dead click rule, I can put on the debit to increase her expenses in this expense account, July 31st, bank, £1,646. And the final question I'm going to think in my process is what was going on at the end of her financial year? What was the situation at the end? And again, if I go back to the question, I can see at the end of her financial year, she still owed a local garage £231 for a new windscreen. So she's got a bill that she hasn't yet paid, but she's had that new windscreen during this financial year, and now I need to record it into her accounts correctly. And again, referring back to the key theory, this time she owes some money, so this is an accrual, an expense accrued, an accrued expense, and that is a liability. So that means she's going to start her next financial year owing this £231. And so what I'm going to do here is work backwards, and you'll see I've entered the 231 on the credit as a liability as a balance brought down on August the 1st, the first day of her next financial year. I'm then, as I say, going to work backwards. So if I'm bringing that 231 down on the credit, I need to carry it down on the debit. So on the last day of her financial year, there it is, July 31st, balance carried down 231. And now I can total off the account, so see which side's got the most on it. In an expense account, we would generally expect the debit at this stage to have the higher amount, and I can see that I've got 120, 1646 and 231, which totals 1997. I then take away anything on the credit side above the total row. Well, there isn't anything there, so the figure that I'm going to send to the income statement to the profit and loss section is this 1997. I then total the credit side, and we know that there's only the one item there, so the total again 1997, and there's the account complete. And here we have another question, 2 for the price of 1 in today's video, and this question, same principles, but what we will see, is that you can have a situation where there is more than one balance. You could have a prepayment and an accrual at the start of the year and or at the end of the year. Again, if you're feeling confident with the topic or from the last question, you might pause now and then replay to check your answer, or stay with me and we'll look at it together. So on the 1st of March 2021, Hader owed £55 for telephone calls, and during the year ended 28th of February 2022, Hader paid £614 by cheque for telephone charges, and at the end of his financial year, he had prepaid his telephone line rental by £80 and owed £29 for telephone calls. And similar to the last question, we're being asked to prepare the telephone expenses account for the year. His year this time ends 28th of February, and again show clearly the transfer to the income statement. I'm going to work through the same thought process. So question 1 in my mind, what was going on at the start of Hader's financial year? So his year, if his year ends on the 28th of February 22, his year must have started on the 1st of March 2021, and I can see at the beginning of the question he owed £55 for telephone calls. If he owes money, that's an accrual. It's a liability. It's something that's waiting to be paid. He's got to pay it. So I'm going to bring that down on the credit of his telephone expenses account. Then I ask myself what happened during his financial year, and referring again to the question, we can see he paid £614 by cheque for telephone charges. This is an expense account, applying the principles of dead click. On the debit, to increase the expense account, I've got Feb 28th, bank, and then the 614. And finally, I think what was going on at the end of the year, what was the situation at the end of Hader's financial year? And this time I've got 2 things happening, so I'm going to take them one at a time. The first thing is, it says at the end of his financial year, he had prepaid his telephone line rental by £80. So a prepayment, we've said, is an asset. Assets are brought down on the debit. So he's going to start his next year, March the 1st, with a balance brought down on the debit as an asset of 80. And using the same principle as in the previous question, I'm going to work backwards. So if that's being brought down on the debit, it needs to be carried down on the credit on the last day of this financial year, February the 28th. And then finally, I go back to the question, and it also tells me at the end of his financial year, he owed £29 for telephone calls. So he's got a prepayment at the end where he's prepaid the line rental, but he's also got an accrual at the end where he owes this £29. So he's going to start next year not only with the £80 that we've already entered as a prepayment, but also with an accrual of £29. And because accruals are liabilities, we need to bring that down on the credit. Then work backwards. If I'm bringing that down on the credit, I need to carry it down on the debit, and there it is. And then finally, I need to total off. So I see which side's got the most on it, and the debit, 614 and 29, gives me a total of 643. I take away the items on the credit side that are above the total row, the 55 and the 80, and that's the figure, the 508, that needs to be sent to the income statement to the profit and loss section. And finally, total up the credit just to double check, and yep, it comes to £643. So what we can learn is that it's not unusual for there to be two opening or two closing balances. Best advice is just to take them one at a time, like I've done in this question. Final word. This principle complies with the accruals concept, which is sometimes referred to as the matching concept, because ultimately what we're trying to do is work out how much in pounds of telephone expenses actually relate to this year, the 28th of February, the year ended 28th of February 2022. And that account has enabled us to work out that the answer to that question is £508. In other words, Hader has used or spent £508 worth of telephone expenses during this financial year. And so that's the figure I need in his income statement. That's what's going to be transferred to his income statement, and that will enable him to have a true and fair profit for this year. Thank you for watching the video. I hope you found it helpful. If you did, please give us a like, share, subscribe, and follow us on Twitter at AccountingHow. If there's anything you'd like to see in future videos, please just let us know in the comments. Thank you very much.